Hello, everyone. A very good afternoon, a very good morning, and a very good evening. Well, depends on what time you're waking up, given that we all are experimenting with the new schedules. I hope you all are getting your essentials, your food, your grocery delivered at your home safely. Why am I bringing this up now? Because supply chain is under a lot of stress, and past few weeks have proved very substantial in how it is going to be. Government is exploring new ways, new innovative ways. Companies and businesses are troubling with how to deliver goods so that we all can stay at home, we all can stay safe. Retail giants like Mother Dairy is looking forward to help from startups to get their goods delivered. Indian Railways has stepped in with e-commerce support and grocery deliveries with their train network. In past few weeks, we have covered an array of topics on the impact of COVID-19 on startups and businesses, what founders should do, how they should improvise, what not to do, etc. As part of the same, we are here for third episode of our AMA series. In first two episodes, we interviewed Siddharth Pai, founding partner 314 Capital, and Ashish Tulsian, founder Processed. Today, we are here to talk about supply chain, logistics, and new innovations which is happening in deliveries. We are welcoming Dhruvil Sanghvi, founder LogiNext. LogiNext started 5 years ago, has raised over $50 million from brands and funds like VC from Tiger Global, Paytm, SteadView Capital, and more. They have over 200 clients spanning across 11 countries. So, Dhruvil, coming over to you and starting on a lighter note, you have always been traveling a lot, and I think you recently posted a status on how no more travel for a few months or weeks is going to bum you out. So, if I quickly ask you and understand from you, what were the number of flights you took last year? Dhruvil? Hi. Yeah. Sorry,
Great, I
guys,
was on
internet
mute.
delays, so please bear with us. Yeah.
No problem. We are all going through it right now. The internet connections are crumbling, and so is supply chains. Internet connections are
Yeah.
much easier to pick up than the supply chains.
Yeah.
But thanks for having me. I think it's great. It's great to be here on this series. You guys are doing a good job at spreading awareness on very important topics in these times. On my flight schedule, last year I would have taken at least 30 international flights and 50 domestic flights. I'm a big travel junkie, and on top of it, of course, who is not in today's world? But my business required me to do that. This year, in last 15 days since my arrival in Mumbai, I've been locked down. I landed on the day of the 22nd March curfew. Took me a lot of a lot of hassle to really get home from Mumbai airport to Powai. And had to show my boarding pass to multiple cops to even let me go, that I'm actually not just traveling around, I'm not just roaming around and having fun, but I'm actually trying to get back home. So interesting times, and this is my...
There's also a fun story behind your haircut, right? So did you use the trimmer yourself at home or what?
Yes, I remember my first use of trimmer was in 2010 at Carnegie Mellon, because we were like all international students, first time in US, trying to save money, and you're used to ₹100 like a $2 haircut in India, and then suddenly that shoots up to $18, and you don't want to go to a barber shop. So I did the trimmer.
But the
I
reason
still
for
had that
your
art.
haircut now, but the reason for your haircut now is not the money. It is not availability, non-availability of the barbers on the road, right?
Yes. The method remains the same. The art remains the same. But I landed on the curfew days, as I was saying, right? And the next day I was like, I'm going to go and get my haircut done. But I was a little late, and the 8 p.m. announcement hit from the Prime Minister. And then I realized I'm going to be stuck in my home for 21 days. And I was anyways sort of going to be under self-quarantine because of my travel back from US. So this is my 11th day in home with a funny haircut, which I had to do it myself. And it's
So I think
interesting.
if the lockdown goes more, we all founders will be reaching out to you on the art of doing the self trimming of the hairs, if not anything else. So we'll reach out to you. Thanks for that. Now delving into more serious conversations for which we all are here for. What are the macro trends you are seeing in supply chain and logistics, right? And when I say macro trends, on a daily usual business day, it's a different story altogether. Today, with the lockdown all across the globe, people are understanding the value of delivery, the supply chain, the backbone behind it. What are the macro trends you are seeing as one of the leading players where you work with the retail giants like McDonald's, like I'm sure all the Unilever you were telling me, and few other retail giants. So, what is the macro trend you are seeing in the delivery, logistics, and supply chain industry?
No, I think that's a very interesting topic. And one thing I've noticed that suddenly the whole world has woken up to a very high level of knowledge around supply chain, which is great. I think people are caring about how their goods are coming to them for the first time in their life. But as of now, the biggest trend that I'm seeing over the last 2 to 3 weeks globally is that every day is a new day for these companies. Supply chains globally are crumbling. When I say globally, that means in every country, between countries, so including air transportation, ground transportation, ocean transportation, right? It's all crumbling. And China was, of course, the center of this, center of the universe when it came to global trade. So that has been affected for last 4 weeks now. In last 2 weeks, because of the lockdown and billions of people working from home, not even millions, billions of people working from home across the world, even the last mile has impacted substantially. What we are seeing as a one big macro trend is that companies which are which had the highest amount of cash on their balance sheets, which we call as the fittest companies in the world, are not the ones who are winning. The companies which are winning now in last 2 weeks are the ones which have shown extreme amount of flexibility and adaptability to this changing trends. Because every day something new comes, a new news comes, or a new death rate comes in some part of the world, and the consumer trend changes. Right? Sometimes people are hoarding groceries. Sometimes people are trying to buy something else.
I will interrupt you there. Let's get more deeper, right? Because I agree with what you said, but we kind of all know that's happening. So getting into the more deeper conversation or more deeper data points, if you can draw few data points from your own business where you have seen a fundamental shift from going from 10% to 100% or 100 to 20%. It can be the delivery rates, it can be the number of orders processed, to give a better view of the scenario.
Right. To share some of the statistics. So first of all, most of our customers have gone to almost a 50% workforce kind of a model. That means they are no longer they no longer have the workforce to run the show. Now, please understand the supply chain is actually a chain built of manufacturing facilities, warehouses, distribution centers, and transporters and home delivery people who are actually coming to your home. Right. So there are so many people involved. This whole world is heavily people oriented. And now suddenly the workforce has gone down to 50%. That's a big stress that has come on companies, which has pushed them to rethink how the business they are doing. So that's number one input that I have. Number two, on the last mile side, a lot of companies who were never thinking last mile, whose supply chain used to end at the store, are now thinking about how to get to customers. For example, one of our customers in India, in fact, they were a farm to market company, and now they have pivoted overnight from farm to a farm to home company. That has suddenly spiked up the last mile volumes. We are seeing a 227% increase in just last mile deliveries. It's 3.27 times than how it used to be. We have seen a 227% increase.
How much percent? How much
227%. Yes, we have seen a 227% increase in last mile deliveries. And this is just our world. That means we can see this based on data in terms of number of transactions being processed on our platform. There's a whole out world which is not even using LogiNext.
This is a number only your company captured. I'm sure it's a trend all across, and when you multiply it, it is going to go many folds.
Right. So, for example, we are right now working with grocery companies, food delivery restaurants, QSR chains. We are working with electronic delivery companies, and so on and so forth. And that's why we are seeing this trend. And when the last mile goes up, even the back-end supply chain gets impacted. That means how the goods used to come to a store or to a warehouse, that those trends as well that change as well, and how people work there. So, for example, our B2B distribution customers who are not really doing any home deliveries, we have seen an 87% increase of usage of our platform for them as well. So it's like a Zoom kind of an effect, right? Because the whole decision making happens only on a piece of technology. One more interesting thing that we have seen from a numbers perspective is that although it may feel that a lot of goods distribution companies may have a dip in their revenue, some of these companies are actually seeing a hike in their revenue. Like one of the interesting fact that we have is that across our electronic delivery customers, they have seen a 20% increase year over year from the same week last year revenue and same week this year revenue. So a lot of these interesting things, like you may feel that, or one may feel that grocery and food is the only important aspect of the life. But believe me or not, people are actually ordering more stuff online. People are ordering more phones than ever, even in last week. Which is surprising.
Even if it comes later, they're just ordering it and queuing it up, right?
And see, that's the whole thing, right? So what people are doing is that they are planning and planning all their next 3 months of purchase today, because they are thinking that this may not be accessible tomorrow. So people who are in the top 10-20% of the chain from the income perspective or cash flow perspective, which is, I think majority of the audience that would be on even your platform as such, right? The top 20% of India, they are hoarding stuff, like not just groceries and food. They are just preponing their other purchases as well. We have seen actually increased purchases on furniture. Maybe it's because people are staying at home, so they have more ideas on what more they want, so they're ordering more.
And there was a debate going on that people will shift to rental economy. So what you're telling me, I don't think everyone shares that thought.
No, I think, see, so when the rental economy goes up, doesn't mean that people stop buying immediately. So I think there's definitely an upward trend in buying and upward trend in rental economy as well. I think that both make sense. It's just that we feel that everybody's cash flow has suddenly dipped. But if you see in reality, like at least in our network, we have not seen cash flows declining overnight. Even for end customers,
declining, and even for your business, it has been same or increasing at a normal growth rate. You are saying.
Correct. That's that's what the impact that we have seen. Yes, what has impacted is global trade, right? So any of our global supply chain customers, right, who were shipping via ocean lines, shipping lines, airlines, their revenues have declined multifold because their availability of these carriers has gone down substantially.
Sure. So can we also talk about 3 layers of logistics, right? From the first mile to last mile. And we have talked about this earlier and with various other founders. You guys kind of divide the whole industry into 3 or 4 layers, right? Can you just want to touch upon at each layer and few names in each layer and how the impact has been on each layer, so the consumers or the viewers can understand better what we are talking about?
So great. So I think every supply chain, as I said, right, it's built up from it starts from the first is the upstream to a manufacturing facility. That means how pickups happen from raw material providers or merchants in an e-commerce scenario to come to a warehouse or to a manufacturing facility. That's when the repackaging, sorting,
cargos and train cargos will be part of this.
It could be any heavy cargo, any aggregated cargo. For example, things like think of an e-commerce. Let's say Flipkart. Let's say it's the easiest example to understand. Or Amazon, right? So Amazon actually picks up tons of goods from multiple merchants, and not just small scale merchants, but large scale manufacturers also, like let's say Xiaomi or any other Apple, or So all these things have to gather into a warehouse. Then warehouse is the entity where they do a pick and pack or repackaging, or they segregate the goods or re-aggregate the goods, and then they give it to that's what we call as the first mile. The second part is called middle mile, where it goes from that large warehouse where all these things are aggregating to it goes to a lot of smaller distribution units, because one large or 2 large fulfillment centers cannot directly go to a customer's home. It just becomes a very expensive effort. So then it has to be further distributed to more warehouses or more distribution centers, which is called the middle mile or line haul. There are 2 different words based on industry that people use.
Can you name few companies which are working in the first mile from the startup industry to get the context?
I think in the first mile in India, if I have to name the companies like Express Breeze, Mahindra Logistics, Adani has a logistics arm which is doing a lot of pickups from large scale merchants and pushing inventory into warehouses. At the same time, there are mostly, so pickups is actually again, when I say first mile is just large companies, they ultimately outsource their job to a lot of smaller players as well. For example, Transportation Corporation of India, TCI, right? It's one of the largest transporters of India. But believe it or not, they don't even own a single truck, right? They're actually an aggregation of multiple trucks. So they work with smaller companies in turn, and then they basically divide this demand into all those smaller players and smaller trucking companies.
Moving to the second mile, few companies.
Middle mile is majority done by companies like again, TCI was an example I would use for the middle mile or line haul. Delivery has a line haul segment. Black Buck, Rivigo, all these names are on the line haul side. There are a lot of traditional players in the line haul. TVS Logistics is there. Gati has a line haul arm as well, and so on and so forth. And then there is a last mile piece, which is from the last warehouse to either the store or to customer's home, which is where there's a lot of fragmented ecosystem lives, right? There's a lot of small players, but some of the names that the audience would know, companies like Shadowfax is one. Companies like Runner, which was an earlier player in this segment. Delivery also has a huge last mile fleet on their own. Blue Dart, DTDC,
Sure.
All these guys, they don't only do courier, but they also do such last mile fulfillment as well.
And for LogiNext, you would be cutting across all layers when it comes to route optimization and automation.
Right. So what we do is we bring basically the whole decision making of all these chains on our platform from an automation perspective. That means all these businesses actually run by human decision making every day, where there is a warehouse manager who actually goes to warehouse, evaluates how much inventory he has or she has, would look at how many drivers are there, and then would divide the whole work across drivers and would do the sortation physically. Now the problem is that this person cannot go to a warehouse anymore. So the only visibility point is to take a decision via a software. And that's the vision that we had from day one, where we would try to eliminate the human decision making consistently. So that's something we do, where we move end-to-end transportation chain onto a digital platform where decision making happens via software or on a software and not humanly.
Sure. So, and if you talk about the impact, again, I'm sure it's across all chains, but we as consumers see the last mile. That's what we interact with. Can we quantify the impact on each of the legs, or is that an invalid question even to begin with? Asking as a layman from a logistics point of view.
Right. So when you say impact is twofold, right? One is a financial impact for the company, and second is the customer service impact for the customer. That means how efficiently these companies are able to do their job, and secondly, how quickly the customers are able to get their goods that they wanted to at the end of the day. From the financial perspective, actually supply chains are now running way more optimally than they ever used to run, because the operating cost has just gone down substantially. The cost of warehousing has gone down right now. All the markets and rentals are down. People are renegotiating their leases with the warehouse players. They are renegotiating contract with their transporters. And transporters have less number of people to do more jobs. So ultimately, people are being more productive across the chain. So financially, companies are making more money across the value chain, across the supply chain, sorry. And the second one for customers is the impact, where because of extreme stress on all the legs of logistics, customers are getting their shipments in delayed time. So the inventory, although it's being manufactured at a right level, or a slightly subpar level, the delay that is impacting the last customer because of multiple companies changing hands and multiple transporters being involved, warehouses being involved, the last end customer is getting everything delayed. Like even if you go to a supermarket right now, the inventory levels are low. For home delivery companies, they are running 3 days behind, 4 days behind. E-commerce companies are running as high as 7 days behind, right, from the numbers perspective. So end customer is suffering a lot for sure.
Before I ask the next question, I'll just mention a thought and we'll park it here. So saying that if we can remove human intervention across all supply chains, all the legs, mostly the stress would not have been there, or would be 20-30% lesser, because what I understand from you, in the end, it's all about people available on the ground and not available on the ground in all of these three legs. So before you answer me that, guys, you can keep posting your questions and we'll start taking them in a while. Coming back to you, Dhruvil. When we talk about gray orange or few other companies who are getting into robotics and delivery and supply chain and automating that, and you guys playing a part from a software perspective, how soon you can think 3 years, 5 years till we reduce human intervention to 50 or 60% of what it is today in all the legs?
I think the best part is that I don't think it's going to even take 3 years. I think in this year itself, you're going to see a huge trend of companies being able to be more flexible around these things, right? So coming back to my flexibility point, this is happening because companies never thought, these all chain companies never thought that they will have such a bullwhip effect to deal with, because it's a scenario that nobody plans for. We have all these operations are planned assuming a 5% variance. When the variance goes to 20%, it becomes too much confusing, and that to the variance keeps changing every day. It becomes too inefficient or error prone for a human being to take decisions on how much inventory to produce, how it will flow, what the other parameters it will impact, and so on and so forth. So I think this is pushing all the companies to immediately reinvent the way they used to do business. 3 years, I think in 3 years for sure, as high as 50-60% of manual intervention will start to reduce, because people know what the companies no longer want to rely on human decision making when any such disruptions happen. One more thing to note here is that everybody's talking about this virus effect or pandemic is not a one-time instance, right? It will go down and again come back in. So now companies also want to be alert that if at all in summer, if it goes down, especially in countries like China or US and Canada and European countries, right, where they're thinking that summer will probably solve the issue to a certain extent. And right now they're all locking down, so it's fine. But the moment it goes to a very low rate and then the whole world starts again and fall hits, at that time, there could be another wave or a smaller wave of a pandemic. And then you've got to be prepared at that time.
Actually, you are right, because I was reading about it. I think as India, at least, we are consuming the stock which was stocked by the government, right? And there's no new supplies coming in on a day-to-day basis. So someone has written an article warning the impact if we don't, bring in more supplies rather than just using the stock. So I think on the same lines is what you are saying. So when we talk about retail industry overall, right? And we saw the example of Mother Dairy, and we saw the few other examples. And I heard one of your conversations in an interview, integrated versus standalone approach. So for a lot of large retailers who were either reliant on their supply chain, on their own supply chain earlier, or who are reliant on third-party supply chains. So both are changing, dynamics are changing. At some point, you are saying a McDonald's is trying to own the supply chain now from an experience perspective and going away from Uber Eats. And at the same time, we are seeing Mother Dairies of the world relying on third-party supply chains and may be okay to keep them as we go ahead. So how this trade-off will happen for traditional retail companies, especially in India, if we talk about?
See, I think India and overseas traditional retail is going to get impacted for sure. It is impacted. It is impacted to an extent where some of these restaurants and QSR chains are even going to zero level of revenue, right? So a lot of restaurants have zero brick and mortar revenue. And I think Vaibhav, I just lost your video, so I hope we're still live. Just want to make sure. Hey, Vaibhav. Hey, I think we have lost you, Vaibhav, and I'm not sure if everybody can hear me.
Vaibhav is joining back in a second.
Sure.
Yeah, it's an internet issue.
Not a problem. It's funny times. Internet is actually something which was so stable and so virtually easy to put up is being disrupted, and surprising to see a similar expectation from supply chains as well, which is so difficult to put up. And I can see some more questions coming up as well. I also see some of the questions are around SaaS. I think those will be also next interesting questions to pick up. So anybody, if you have any SaaS enterprise sales related questions, I know a lot of the audience here is it could be early stage entrepreneurs, might be in the middle of raising funds or would want to raise funds this year, and how to show, how to consistently maintain momentum of your revenue in SMB SaaS or enterprise SaaS. I'm happy to take some questions around those as well. So till Vaibhav joins, I can just start picking one of the questions. The first question I can see is which sectors would not be impacted by coronavirus? I can address this question maybe more on the supply chain side and non-supply chain side as well. So for example, one of the sectors that we have seen still doing strongly is the financial sector. I think BFSI is still kind of picking up. A lot of BFSI industry companies are not still on a layoff mode. They have just done hiring freeze, but they will bounce back pretty quickly. So that's one industry to kind of look at. Second is, of course, the online and cloud kitchen kind of industries will definitely have a more headwind. There's no there's a more push towards making them successful. So that's interesting. And one of the other industries, and I have Weber back on.
So we just saw the might of internet. Yes, go ahead.
Yes, it kind of drops, right, and it comes back again. But I was addressing the question which sectors would not be impacted by coronavirus, and I talked about BFSI, and we talked about any cloud kitchen kind of businesses in terms of food and grocery, where they are only having dark stores and not retail stores. I think people will still not want to go to retail stores for next 3 months, even if the coronavirus kind of settles down. So any company who is directly going to consumer will be a big win. For FMCG, there will be a huge trend of D2C. All FMCG companies have been thinking about direct to consumer for a while, and I think this is just going to accelerate the trend, right? So there were companies in US like Dollar Shave Club and Beyond Meat, which were just disrupting traditional distribution model and directly going to customers. We will see more and more of those happening in India as well. So I think these three industries are the biggest one, which I can see that will be a good push towards going ahead. And of course, technology is one that you would always rely on. So that's one question number one.
Before we get into the questions, just to
go ahead. Yeah, I think we were talking about something, and then if you want to ask that question again, which you were on, that's fine. I can take up more questions also, whatever you prefer.
So yeah, let's take that question on the retail industry. We're talking about how Indian retailers are going to get impacted. And quickly, if you can answer us, will it be integrated or a standalone approach? Because I've been asked this question from quite some time now. Will the mother dairies of the world or Reliance Fresh of the world own their own supply chains, or they will move to aggregated parties? What is your view on that? And then we'll move on to the next question.
I think, as I said, right, what I was saying is retail is definitely going to be impacted in a big way. It already has brick and mortar businesses, except for non-grocery brick and mortar businesses, have entirely gone to zero revenue. And this kind of a risk no enterprise is going to take going forward. In fact, we will be also seeing a lot of SMB retailers trying to somehow make sure that they have a balanced portfolio of customers coming to them on brick and mortar version versus they going to customers from the home delivery perspective. So I think retail it will be very difficult for retail to bounce back the way it has. There was already a strong push for e-commerce globally. This event has just kind of made that even more severe. So overall, retail is going to get impacted. Will probably not bounce back to all-time high levels for sure.
Sure. So Sachin has asked, how do we perform delivery if supply chain is disrupted? We rely on third-party supply chain. How is Rent Mojo, Furlenco, etc. will work? Very specific, but if you can answer in general.
So what's the question again? That how will they do the fulfillment?
How do we perform delivery if the supply chain is disrupted? We rely on third-party supply chains. So something similar, which I was asking, owning the supply chain versus relying on the third party.
Right. So I think what you should do is a great question. You should start moving to a hybrid model. This is one thing that every small and mid-scale business does, which a large-scale business does not do because they have more risk resilience and more risk planning, which SMBs don't have. Is move to a hybrid model. That means from now onwards, start taking control of some part of the supply chain by doing it yourself. You will always have some sectors where you will be able to consistently see demand, where you will know, like in a particular zip code or in a particular area, you would know that this is your consistent demand area, and you have enough density of customers. So you can actually do fulfillment in a much more easier and controlled way. Number one. And number two, of course, you can't take control entire supply chain in-house always because you will not have enough same density pockets across geographies. So for those, you can keep it outsourced, but you can outsource to 2 or 3 parties and not depend on only one vendor. So that if one vendor gets impacted, you can always have a backup ready. And number 3 is there are new concepts like freelancing job boards popping up, right? So there are actually companies which are totally non-distributed. Like for example, we just launched a job board which allows any driver to sign up and start doing deliveries, which is a traditional freelancer aggregation model. But the difference here is that we don't take any cut. It's a pure play decentralized model, and we are not running it as a company. It's a only tech platform where anybody can start doing deliveries. So you can also have some reliance on such job boards where you can immediately find people who can take up your jobs for a day, for a week, certain shift timings of the day for next 1 month, and so on and so forth. So I think that kind of transportation and last mile redesign will be required for a business like yours, so that you don't really get impacted. And I'm sure likes of Furlenco or any other company who is into last mile delivery or who are reliant on last mile delivery will start taking those routes.
Dhruvil, also, addressing on a different note, on the sales side, on the business side. So I want to ask few things. One, because a lot of people ask about specific innovations a company has done or can be done in a particular sector. So what 2 or 3 things, and I'm sure I'm not asking trade secrets here, but 2 or 3 things you guys kind of working on, which you think are fundamental. I'm not asking a feature upgrade here. I'm asking a fundamental shift you guys can see and you're kind of trying to work upon. And second, we'll enter into sales, how we can reach out to the customers at these times with these new updates, which is the second question. So first, what fundamental things you are working on as one of the leading players in logistics industry, which you think are a fundamental shift and are going to be a fundamental shift?
Okay, from the logistics perspective, you're saying.
Yes.
I think the biggest change that we are driving right now is we are making sure that customers now start thinking about how the goods have arrived to them. I think that was one trend which nobody cared about on how you receive a package. Now everybody wants to know where exactly it came from. So supply chain visibility is going to be fundamentally different now. Even if this once pandemic goes away, people would want to know where my goods have originated from, where it got repackaged, which companies and drivers really carried it to me, and which areas it came from. We already have kind of a lot of these features where you can go ahead.
So very interestingly, and I want you to think of, on the similar lines, because supply chain visibility and transparency is what I can note is the upcoming trend. So can we note down 1 or 2 of these buzz keywords trends, because it's much easier to communicate. So supply chain visibility and transparency, definitely upcoming area where a lot of supply chain and startups can innovate and work towards, given it is going to be a new normal in the industry. Any other such things you guys are thinking of?
So yes, that's number one. Number two is we are absolutely, as I said, right, we are starting a new job board, which is what allows anybody to start picking up deliveries without having to really go and do contractual lock-ins and so on and so forth. So a lot of QSR chains is what our customers. So we right now work with KFC, McDonald's, Burger King, Starbucks across different geographies, and they all are quickly moving away from the food aggregator kind of a model, right? So they don't want to give the 25% cut to Uber Eats or Grubhub. They don't want to take 20% to a Swiggy or to any other Zomato. They now want to directly find people who can just pick up the food and deliver food, and because they are going to see more and more.
You're saying crowdsourcing the delivery for the last mile.
Correct, but the difference is crowdsourcing was always happening via Swiggy and Zomato, but they also charge restaurants a cut of their value of that order. So if you order something for 250 rupees from a local joint, 50 rupees out of that goes to Uber Eats or Swiggy. That's how they make money.
So you are saying I as some random guy on the road can pick up that from the restaurant and get it delivered to the consumer, and I will get paid that.
And you will directly get paid online. So anybody can start doing it, and that's something. And you don't have to really be a driver full time. You can actually do it for 2 hours, because a lot of these food trends are actually only at a spike. So there's a heavy volume between 12 p.m. and 2 p.m. or 6 p.m. and 9 p.m. So there's always a spike.
Very interesting. You are saying gig economy in deliveries. This is going to be massive if implemented properly.
And you won't believe, this is a very old, this. So many companies have tried this over the last 8 to 9 years, but every company ultimately starts to make money by charging the retailer, which is what retailers hate, because they have to ultimately let go 20-25% margins. Retailers were okay with it as long as their delivery revenue was still very small part of their business. The trend that will change is that delivery revenue will now become a majority part of people's businesses. When that happens, I as a retailer can't pay you 20% of my order value as a cut, because then my bottom line goes down by 20%. And most businesses have 35-40% EBITDA. Now, just because you are charging me 25%, I'm not going to be okay with a 10% EBITDA. So I'm going to start finding more innovative ways, and that will drive demand for this pure play crowdsource model without having to worry about contracting with a driver or contracting with a Swiggy and committing volumes, giving a cut off my order value, nothing. Fixed delivery fees, and you're good to go.
And clubbing this with the supply chain visibility and transparency, it is a complete model. Then I, as a consumer who's sitting at home, can see who has picked my food. Can I trust that guy? What is his credentials? Where has he reached? Because what my worry will be if I don't order from a branded supply chain, let's say, or a branded delivery guy, right? So my worry will be the hygiene, the safety, and all of that. But if the transparency is brought in supply chain, this can be clubbed together.
Like for example, there are models, like in fact they are going on right now, where societies are pooling up together, where if somebody is going from society to a grocery store, can you get ABC for me as well? Because nobody wants to really wait in the line and do it. So a lot of those things which were kind of cliches, like, which were not accepted by the society earlier, of your neighbor or a trusted person getting something for you, now those trends will start being the norm, along with supply visibility, as you said.
So a lot of new innovations will be coming in the B2C last mile space, as you said, right? People pooling in together, and I'm sure a lot of hardware play is going to come in that end, and how to get that food from the grocery delivered to the society now, because he has bought for the whole society. So a lot of new innovations we can see there. What is on the B2B side? How about the large merchants? What is going to be innovative there? Minus the supply chain visibility, which we already talked about.
So for B2B distribution, one of the key impact, because B2B distribution is basically picking up from a warehouse and delivering to a store, or picking up from a merchant and delivering to a warehouse. That's what a B2B distribution means. In B2B distribution, cost has been always the biggest parameter. And companies were always not okay with sharing their SKUs in a single truck with somebody else's SKUs elsewhere. For example, if I am if I'm a small merchant, I would always call for a truck dedicated for me. Even if it's expensive, I would want to keep my SKUs separately. So I think more aggregation will happen. There's going to be a big need for B2B distribution players, right? In last mile again, not just not just the line haul, which is where there are black bucks and Revigos of the world already. But in the last mile, there were players like Porter, Blowhorn, these guys. So there will be more demand for them, small trucks going into multiple smaller areas and aggregating demand and trying to bring the cost further down. Because now every store will ultimately have a last mile component, which will ultimately put more cost pressure on the entire supply chain, right? Because customers are not going to pay extra. So where will that money come from? So naturally, all these additional load of last mile delivery will get transferred to a backend supply chain, and backend supply chain will have to be cheaper.
Very interesting. Getting into the more sales side of the conversation, you have a lot of large enterprises, and they have their own problems, bigger problems to tackle with some of them. So what kind of messaging you are giving to your clients? One, second, as you said, the business is up, so I'm sure you are building more features, you want to upsell more, and these are enterprise clients. So how do you put that message empathetically across them? Hey guys, we have some new solutions for you, and we are asking more money from you at these times. How do you communicate that, and what is your client approach right now?
See, great question, right? So first of all, asking for more money from anyone is not going to work at this point. So we are not doing it. I will not even advise it. So all these SaaS entrepreneurs or businesses who are trying to work with other businesses and selling any services, which is a more additional coronavirus tweaked service or additional feature you might be rolling out on your platform, you don't have to monetize it right now. The good part is about such businesses is that you just have to get your customers used to it. So what we are doing right now is we are focusing on rolling out important features which makes our customers see more value from our existing technology. So now they're not paying extra, but they're getting more value. So that, number one, it reduces the risk of customer thinking, hey, do I even need this software in the first place? So it reduces the risk of churn. And number two, it creates a recall in customers' mind that these guys actually proactively did more when I needed it. And number three, customers will at some point get used to it. So you can always upsell that feature after 3 months, 6 months, right? Or you can discontinue the features. But I'm sure if those are really valued features and implementations, customers would want to pay for it, but at the right time. The only thing is right now, expansions of customer within a customer is almost flat. We are not really seeing more expansions within one customer from a revenue perspective. We are seeing more usage, but not more revenue per customer.
And a very specific direct question. In April, May, June, a lot of recurring contracts are being signed, especially in the Indian context, right? I'm not sure how it works in the US context in your industry. And these are tough times, so we can't reach out to them exactly with the contract in hand, but we can't stop the service also. So if you have a very quick, sharp answer on how on the retention of large contracts during this period, because that will be churned. Forget expansion, you'll be churning out customers.
Right. No, great question. I was on a call yesterday with one of the customers, not an Indian customer outside India, but was a mid-scale company is going through a pretty difficult situation right now because the revenues have gone down 20% and the market cap has gone down 40%. Since we're in enterprise space, most of our customers' stocks are reducing. Their CEOs and chief executives' net worths are reducing by 40%. And that worries them. They don't want to do anything extra new at this point in time. So they were talking to us about it. What we did is we basically we had a slab where the more they use, the discount kicks in after a particular step. Let's say if they are using 100 license right now, if they were using 500 or more, there's a discount that kicks in. What we did is we reduced that slab to 100, so that even if they end up using slightly more right now, the discounts will start kicking in immediately. So that's one of the levers we tried to use, where we are reducing higher discount slabs for multiple customers to a lower number so that they can avail those discounts earlier than later. So that's one. Number two, we are also reducing the lock-ins. A lot of customers have a worry that if my annual contract renews, I'm locked in for the whole year. I don't know what's going to happen. So we are reducing the lock-in to a 1 month, 2 month lock-in, so that they don't have to worry about, hey, if the situation continues, do I keep paying you for the whole year? Because I can't do that. So then they have an opportunity to pull out later on. So we are basically delaying the risk by 2 months, 3 months to at least pass this time somehow. And we are, of course, hoping that the situation doesn't continue for months and months, because if this goes beyond 3 months, then we don't have a strategy on what's going to happen.
So easy way to say that is, if your retainer contracts, people should just let them go, keep giving the service, and take a 3-month window in their balance sheet, which is kind of a write-off for now, and then we'll think about it.
No, find out a way to discount it, right? So of course, don't let letting the entire revenue go for 3 months is the worst case scenario, that's a no-brainer, everybody can think of. So there's nothing smart in that.
Sure.
What is smart is trying to create more value, offering lower discounts, lower lock-ins. That means if you have a renewal on 1st April and the customer is not willing to renew for the whole year, tell them renew for 2 months for now, and we'll have a conversation again. So that reduces their whole risk of the whole entire budget commitment for the 1 year. Number two, give them 20% off right now. Let's say if they're feeling the pain, if your software is priced at $5,000 a month, tell them we can do $4,000 a month, right? So let some of your margins go. Share that load with your customers, because they are coming to you to ultimately reduce their cost. And if you are stuck at your price point, it may be a problem, because then they will just decide to discontinue your services.
So Karthik has asked a very interesting question. I will read the second part of it. Will there be any new job roles in 3 to 6 months from now? And I want to kind of put it in a different way. So if you can think of on top of the mind, will there be any new designation/roles created in next 3 to 6 months? So what I'm trying to understand, how will the skill set and expertise shift in the logistics industry overall in next 3 to 6 months? Of course, there are already existing roles, but what new roles we should look for so people can start brushing up their skills for that, if at all?
I don't think there will be a new role creation. First of all, I don't think there's going to be new jobs in the market for 3 to 6 months. Even in your
industry.
No, I think no industry. Like no industry. We just raised our money 3 months ago, but we're still slowing down our hiring, because the general guideline is that do not try to overplan. So and companies who are under financial stress or under a pure play bootstrap model, or an enterprise which is purely driven by fixed budgeting, they're all trying to conserve cash, because that's the cash is king. Conserve cash is the general guideline everybody's getting. So no more job roles, to answer your questions. Will there be new job profiles being created? I don't think that will be the case, but existing employees will be expected to multitask. They'll be expected to do their jobs in a smarter way, so that companies can ultimately still see some growth with the existing workforce. But I don't have any new role in mind which the world would see. I think every existing employee, as long as you are in your current role, try to do it in a better way. Try to find smarter ways to optimize productivity. Try to go into a more multitasking manner if you have to. Talk to your employer more often and see what more value you can create, how closer you can get to more revenue streams, so that your company can build more revenue. I think all those conversations are going to be expected from the smart breed of employees. That's the only change I see for next 3 to 6 months.
So Brett has asked a very specific question. Will smart geocoding and advanced optimization help the logistics sector now more than ever? Smart geocoding and advanced optimization.
I mean, yeah, of course. So smart geocoding is about converting addresses into a pair of lat long. Very technical questions. I'm assuming this person is from our industry.
I'm hoping so.
But I see that's the need of the hour, right? I think mapping address locations are going to be key, and they should have been key in India for 5 years ago. Half the world is already doing a great job at it. India as a country and a lot of other emerging countries was just way behind it. This is going to push that trend forward where everybody would want to locate themselves, because now things have to come to them and they don't have to go to things. That's number one. Number two, advanced optimization. Absolutely, cost conservation is the trend right now. Advanced optimization reduces your capacity cost, reduces your truck cost, your driver cost, and that's what people want to do, because there's not enough workforce, there's not enough availability of trucks in the market, and demand is still there from customers. So that's the only way to fulfill. We can take a couple of, if you want to take a couple of non-technical questions, that's fine too. I mean,
sure.
I'm happy to take a couple of SaaS questions.
Okay, what impact on SaaS sales do you see for the LogiNext and the industry in general? So if you can quickly answer a few of them, so I'll try to cover more and more questions.
Yeah. What impact do I see on SaaS sales on
SaaS
LogiNext?
sales for LogiNext and the industry in general.
I think SaaS is one. So this is where truly a recurring revenue and transactional SaaS will get differentiated. That means transactional SaaS is. Go ahead.
Before you answer that, I'll just pull up an analogy the VCs are using these days. V curve, U curve, L curve. A lot of curves are being said in the market. So if you can quickly help me, what curve the logistics industry is going to take? Are the sales going to go down and suddenly rise up? Going to go down or flatten? So what are we talking about?
I think it will be V curve. We are expecting a V curve. That's what our plans are. Our business plan reflects a V curve kind of comeback. Our new sales, and then that's what will happen in logistics or a lot of other industries which are not really disrupted for a long time. So V curve is what my opinion is. To come back to the question on what the sales impact is, I think new revenue is definitely being delayed. Existing customers are on a high of usage. That means this good stickiness is high. So there's no churn. But expansions are on hold. They are being, because this is not the right time to ask more money from the same customer. So I think new revenue creation is on a lower side, on a flatter side, and it will pick up again after a month or two. That's what the anticipation is.
And Sukriti has also asked the funding scenario in the logistics industry. Again, coupling up this with the last question. So again, a similar V curve in the funding scenario in the logistics industry, or are VC is going to say, hey, come with the new innovative solutions. The existing solutions are not that fundable anymore because we are living in the new world with the new rules.
I think number of investments round will definitely be a V curve. It will spike back again. See, VCs have money and their job is to deploy it. They just can't keep sitting on it, because it's actually more expensive to sit on money than not deploy. Than deploying it, right? So that's why they have to deploy. But they will deploy at a lower valuation. So I think there will be a hit on valuation expectations. After 6 months, investors will still expect, hey, why did you not grow your revenue? Why your profits went down temporarily? So companies which still somehow survived a very big dip, if they have a small V, it will be acceptable. Large Vs will have a huge valuation markdowns. And those companies will struggle to raise money. I don't think VCs will ask for newer ideas. As long as you are able to show some traction consistently or a small dip, that should be fine. But valuations will definitely be on a lower side. And number of transactions will spike up again, because they have to deploy money the moment market picks up.
And as of now, based on today's understanding, we are looking at a 3-month downfall before we start rising up, or you guys are looking at a 6-month window before we will start getting up again from the industry perspective?
We are planning for, again, this is not an answer for everybody, but for LogiNext, we are planning a 3-month only. We are not seeing
3 months
this is
only.
going to continue. Yeah, we are not seeing that this is going to be a multi-quarter trend. Although there are mixed opinions around this in the market, there are experts who are saying, this can lead to recession and this and that. For our business, we don't think that if there is a slighter downtime or flattening of revenues, our customers will stop buying it, because it's a very it's not an impulsive purchase. We are kind of business. It's a very well thought through purchase companies make, and that's why we are seeing a 3-month dip and not a longer dip.
So just to generalize again, as Dhruvil said, not for everyone, but for companies who are dealing with large enterprises, Fortune 500 companies kind of stuff, it is going to be a 3 to 4 month impact if you are as part of the essential tool list, because they are not going to stop functioning, and it
Correct.
cannot go beyond 3-4 months. Otherwise, the world economy will collapse like completely, right? So fair enough. So Naga is asking, government and delivery players are expected to push drone deliveries. Do you think India is ready for this kind of change? Will it have a major impact on jobs in the sector? And I think drones have been a hot topic now more than any time ever. So any insights you have from an industry perspective? What are people in your industry talking about it?
Yeah, so I think what people in our industry is talked about is that all this automation technology for fulfillment, like drone, there's a fundamental unit economics issue there, because it's expensive. There are regulatory restrictions. And there are range restrictions. Like, you can't actually fly a drone to 10 miles to deliver something, but you can send a truck 10 miles away, and 10 miles is not even a long distance. So drones will only change for very hyper localized businesses. And from the world economy or Indian economy perspective, hardly 1% revenue or GDP of logistics actually comes from hyper localized fulfillment. Majority of even last mile is actually more than 5 to 10 kilometers. Like, some of the last mile is up to 40 kilometers, 50 kilometers as well. So my opinion about drones, I don't think it's going to really make any change. There's a lot of improvement on battery ranges, hardware cost, reliability, safety. There's so much work to be done yet. This will not suddenly, make an entry into the drone business. So I'm not in an agreement of. I don't have an opinion that drones will actually be the norm again, but like very soon. That's still like 5-10 years difference to that.
So you are saying it's still 5-10 years from an India perspective is what you think from when it comes to drone. Very interesting.
From any perspective, for globally, I don't think any country will go to drone immediately in the next 5 years. That's what my opinion is.
So anyone who is working in the drone technologies and drone industry, it has to be more on the B2B side rather than on the B2C side as of now.
Correct, absolutely. More on the surveillance and those sort of things. That's why drone is picking up really well. More B2B applications like defense applications, survey applications, construction applications. There's a huge market scope there, not on B2C deliveries.
Not on B2C deliveries. Aman has asked a question about SMBs, right? So it's again coming back to the thing we are talking about, retail sector. So if we leave the large retailers out of it and we talk about the SMB market, the trend even we are seeing, a lot of SMBs want to go online as soon as possible for this period, and once they get hooked to this, they would want to make online their primary delivery channel. And so I want to talk from an opportunity perspective and logistics sector. So what is the white space here with 100,000 SMBs going online, a lot of deliveries coming in, starting from small orders, then going to big orders? What is the white space here where few of the companies can tap in?
A big opportunity is that India SMB SaaS for retailers. Indian SMB retailers was a very tough market. Most SaaS companies have failed at selling to Indian small retailers, and they are super disrupted right now. So this is a ripe spot, or market timing is very, very strong to move them online, because they know about these softwares. They have been pitched these softwares, but they never spent on it. They were okay as long as it was free. This is the time when they'll have to pay for it. They'll have to pay for an online inventory system. They'll have to pay for online delivery systems. They'll have to pay for last mile fulfillment systems. So if somebody is building an SMB software for India, I was somebody who was totally against it so far. But this thing is going to change that. So I think that's a wide space. There is no significant player in this market. I don't know of any company which is doing even more than $1 million in revenue in Indian SMB's retail SaaS space. So if you are building that,
so you're saying
great.
Indian SMB retail SaaS inventory management to route optimization to discounting, everything together. And you're saying there are not many players even in India right now doing that.
There's none. Like for SMBs, there are very few players who are sizable. I mean, there are few small
Sizable,
companies
yeah.
who are trying to do that,
Sure.
but the opportunity is there. There's no big company doing it. So you should absolutely tap into it.
And we can think of Indian SMBs paying in next 6 months to 1 year. It will be their habit and their mindset. So we are not talking about 5 years, right?
No, I think because this is when the market trend changes, right, quickly. So there will be a good aggressive customer acquisition you can do over the next 3 to 12 months. And then that defines, right? Well, then the whole ecosystem starts to think about it, because then you have a critical mass. If they become your users, then it's much easier to convince other people. For SaaS, that's the difficult thing, right? Getting to a critical mass of B2B customers is the most difficult thing for SaaS, or for any business for that matter. So once this is the time for next 3 to 12 months, 3 to 9 months is the time to quickly acquire those at a lower cost, because this is what is in their mind right now. And then you can always expand them, upsell to them, or acquire more such SMBs. And the market size is anyways huge. Like there was no question around market size ever. There are tons or thousands of SMBs who are purely offline in terms of how they run their businesses. Great opportunity there.
Sure. And of course, coming to the most hot topic, as always, is funding, right? So a lot of funding questions I can see, and I'll try to frame them in more larger buckets. So you have Tiger, you have Paytm, SteadView, you have the famous large investors across the globe. So to avoid the redundancy of information, anything particular they told you, which was just get on a Zoom call and cut down the cost? We all know that. But anything particular they told you which you implemented and kind of moved the needle for you?
So first of all, we are on a very high frequency communication with our investors right now. This is the time to communicate to your employees, customers, and investors more frequently than you used to do. That's what we are doing. They are helping us with creating strategies on what if our 3-month dip becomes a 9-month dip. The answer that we don't have right now is what they are preparing us for, because we are only thinking still a 3-month dip, and then we will bounce back, more new revenues and whatnot. They are asking us to build a plan, which is what we are doing as we speak. What if there's actually a 9-month dip into new customer acquisition? What will the strategy and business plan look like? How would you then be positioning your next round, because their returns get impacted if you don't raise money for next 3 to 4 years, right? And they want to see a valuation markup and so on and so forth. So that's something we are working on. What they're helping us with is they are helping us with global benchmarking on how other companies are doing it. Because usually, and that's the value I see with investors, right? They can't tell you, or they even don't tell you on how to run your business or what exactly to be done, but they tell you what other companies are doing, what other companies in your space, your competitors are doing, what similar SaaS companies are doing, what other companies in their portfolio of your SaaS of your size are doing, what are the global trends that they are seeing? Are they seeing job cuts across retail industry, across transportation industry? In our geographies that we are focusing on. So all these data points are flowing from them, which is allowing us to be better prepared and make that 9-month dip plan, which we don't have right now.
Yeah, and one last question, kind of before we summarize the session. Companies who are raising Series C, Series Z, which is $50 million and above, and I know there's no one answer to this. How easy or hard you think it will be, because the growth will not be there for next 1 year. It will only be survival, or mostly just be there where you are. And I'm not talking about logistics, I'm talking in general. So are you saying the growth will still be a key matrix after 1 year, or investors are going to let that go, and especially the large investors who are cutting $50 million checks?
For SaaS, growth will be still be the most valued thing. And for companies who are, so SaaS means like companies who have a recurring revenue and good gross margin, those companies will not be challenged on profitability, because their business models inherently have a high gross margin. So it's okay. They will, if they are making a little lower gross margin or net margin right now, it's fine. So investors will be mindful of that. For companies which have no recurring revenue, lower gross margin, who are into trading kind of a business, or they're into marketplace kind of a business, companies who are into heavy feet on street model or delivery heavy operations model, those have lower gross margins, and they will be definitely under pressure from the fundraise perspective, because for them they'll have to show growth and profitability both, And honestly, there's no answer to achieving both. Like, there are very few companies who actually achieve both consistently. That too in tough times. So all of them ultimately will have a profitability dip. They will find it more difficult to raise money over the next 1 to 2 years. Especially 50 mil plus rounds, very difficult because they're anyways more number driven. And if you don't have strong numbers, there's nothing else you can show to raise money. So they will have to kind of think about longer roadmaps. So I'm not sure who asked that question. I'm assuming they are working for a Series B plus kind of a company.
I hope so. I guess so. Yeah. So yeah, if I have to just summarize the whole session into 3-4 key points, I can remember. One is supply chain visibility and transparency is going to be a new big trend, and a lot of innovation can be done around that by the founders, entrepreneurs who are looking to start in this industry. Second, gig economy / crowdsourcing of deliveries, which has been a model, as you said, but new to Indian market, and a lot of new rules and technologies built around that. Third, you mentioned for your logistics industry as of now, 3 to 4 months, kind of a V curve, but not more than that because it is part of the essentials.
Absolutely.
So yeah, these are yeah. And go ahead.
No, I was just agreeing to it. So go ahead.
Sure. So any more point you want to add? Like, I'm just trying to summarize the session for the larger good.
No, I think the only suggestion I have for the audience, or one thought I would like to leave you with is this is the time of over information. So make sure that you pick and choose the right information for yourself. You will keep on hearing multiple advices, thoughts from thought leaders of the industry, from successful entrepreneurs of the industry, or even everybody else who has don't have a say in it, but they still want to have an opinion. So make sure that you consume the right information, analyze with facts, and take the right decisions for yourself and for your companies.
Sure. Before I say bye to Dhruvil, guys, you can join in on Monday at 3 p.m. I will be interviewing Prashant Tandon of 1MG, and healthcare is one of the key topics right now. And we'll get into, again, from the deliveries to the policies to the stress on the healthcare system, how Prashant is dealing with it, and how healthcare overall is going to change in different verticals. Thank you, Dhruvil. Thank you for joining us. And we hope to stay in touch with you and get more insights.
Thanks for having me, Vaibhav.
Thank you.
Bye-bye.
Thank you.
Bye, everyone.
Bye.
Thank you.